Hello and welcome back. I want to apologize. Apparently, when I uploaded the videos, problem 8-4b and 8-6b were not included. So I apologize about that. What I'm going to do right now is just go ahead and work through those problems. Okay. So the first one we're going to walk through is problem 8-4b, and that's on page 417. Now, this one deals with credit card sales, okay? It's actually not really that difficult, okay? What we have to ask ourselves is, what is happening when? That dictates, do we book cash or do we book a receivables, okay? Now, normally, in the real world, when you use your credit card at a business, or if a business accepts a credit card, usually, more often than not, they get their money instantaneous. I don't mean at that point in time, but what happens is usually at the end of the night or the end of the business day, that business kind of shuts down the register, and they shut down the register, and basically what they do is they send the information electronically to that bank or to that third party, and it says, hey, here's the number of credit cards I have, or here's the number of people that charged using Visa. Hey, Visa, here's how much money you need to send me minus any fees, okay? So that's what we're going to go through. I know that concept might seem as clear as mud, but as we go through these examples, I think it should become clear. So let's look at number one, or May 15th, all right? So what do we have here? We got Captain Paul's Marina. They sell boats and other water recreational vehicles, right? It says approximately 3 vehicles are sold each week. Okay, no problem. We can do that. The following transactions occurred during the 3rd week of May. Not a problem. So, first transaction we have is on May 15th. Okay, well, what happened? We sold a boat, or sold a boat trailer actually, for $750. It cost us $500. We sold this to Sam and Myrna Marston. They paid using a personal check, okay? I don't care if it's a check, cash, it's all the same, okay? We have a cash sale, right? Think back to chapter 5, I think. We already did this, right? So remember, when we have a sales revenue, or when we have a sale, and we're a merchandising company, we got to book 2 transactions. First, we recognize the sales revenue, and then second, we recognize the cost. Now, to make it easier for us to remember that, if we read what happened, we sold a boat for a cost, we sold a boat, and that sales price was $750. It had a cost associated with it also, $500. Right off the bat, we should hit in our head, I need 2 transactions. So, first thing we're going to do is hit cash. I don't care it's a check. It's still cash. Okay? We still book it as cash. For $750, what are we getting? Well, we got sales revenue, right? So we are going to credit sales revenue for the $750. Okay? So what are we doing here? Well, we're recording a cash sale. That's why we're doing this journal entry. Okay. Second thing we need to do is book the cost of this trailer. Remember, to book the cost, we have to debit cost of goods sold, credit inventory. So I'm going to debit. I'm going to type in COGS, and if you remember, that just stands for cost of goods sold, for $500. And I'm going to credit inventory. Why? Because our expenses are going up, our inventory is going down. I'm just going to abbreviate here. Why are we doing this journal entry? Well, it's simple. We need to record cost of goods sold. Okay, perfect. Okay, the next one says on May 16th, so 5/16, what happened? We sold a $10,000 boat. It cost us $6,500 to Calamute Lake Patrol on account with terms 210 net 30. Okay? Nothing new here, right? I think we've done this, I want to say in chapter 5 too, booking sales, right? Or booking sales on accounts receivable. Super easy, right? We have a receivable, an account receivable specifically, for how much? Well, $10,000. That's the price of the boat. What are we going to credit? Well, we're going to credit, obviously, sales revenue for the same amount, $10,000. And then we need to put in our explanation. Why are we doing this? Well, we're recording a credit sale. And I'll put in the terms here, 210 net 30. Okay? So the next thing we need to do is to record the cost of goods sold. We already did that, right? I'm going to do the same, watch this. I'm going to do the same exact journal entry. COGS, inventory, right? I'm being super duper lazy here, but that's okay because we already have it, right? This is the journal entry to recognize costs. We need to increase our cost of goods sold, decrease our inventory. So for how much? Well, the boat cost us $6,500. So that's the amount of my debit, and that's the amount of my credit. And then we just need to put a explanation. Watch this. We already did it. Recording cost of goods sold. Right? I'm being lazy. Why should I retype it when I already have it up here? Okay? Okay. On May 18th, let's see what happens. On May 18th, we sold a $1,200 water scooter. Cost us $750 to Kyle Bronson. Okay, let's stop right there. Right off the bat, what do we have? A sale. We got to book the sale. Okay? Super easy for us to do. How did he pay for it? Well, Kyle Bronson used the United Merchant credit card to charge the cost of the water scooter. So Kyle charged $1,200, right? Captain Paul's mailed the credit card slip to United Merchants the same day. United Merchants will send a check within 7 days, net a 2% proceeds. Okay, what is going on here? Well, apparently United Merchants and Captain Paul aren't very technologically advanced, right? Captain Paul has to send the credit card slip. He has to physically mail that to the bank, United Merchants. United Merchants will receive that. And instead of United Merchants electronically taking that money and putting it into Captain Paul's bank, United Merchants is going to send him a check and say, okay, go ahead and cash this and deposit it in your bank. So right off the bat, we have a time delay going on here, okay? This is old school, right? Now everything's electronic, electronic transferred funds, all that other good stuff. Okay, unfortunately, we don't have that here. So we need to recognize, okay, we have a time differential and we need to account for that. So normally credit card slips would be booked as cash, meaning if everything is instantaneous, right? Or if everything, we have electronic funds, they go out, they come in, we notify the bank electronically, you owe us money because of credit card charges. The bank says, okay, we acknowledge that. We will electronically transfer the funds to your account. That's not happening here, okay? So because there's a time delay, we do have to book AR, right? Accounts receivable, but who owes us money? Well, in this case, it's United Merchants. So I'm going to hit AR United Merchants for $1,176, okay? I'm going to credit sales revenue. Okay, for how much? Well, the sale was for $1,200. Okay, why do I have a difference here? Why isn't United Merchants sending me the full $1,200? Because we have a credit card fee expense. Okay, and that's the 2%, right? Which ends up being $24. Again, the only reason why we're doing this way is because there's a time differential, right? We have to wait basically 7 days for them to send us a check, okay? So, what am I doing here? Well, next thing I need to do is explain why am I doing this, right? Well, I'm recording a credit card sale, and I'm going to put in the notation here, 1,200 times 0.02 equals my $24. That is just so I know, hey, that's the credit card. That's how I calculated that credit card fee expense, okay? So we booked the sale. We booked the recognition of that revenue. Now we need to do our second journal entry, which says you got to recognize the cost of goods sold, and you got to show the fact that your inventory is going down. Okay? How much? Well, the water scooter cost us $700. Okay? So we're going to debit cost of goods sold for $700. We're going to credit inventory to show that our inventory is decreasing by $700. I need to put my explanation here. And my explanation says I'm recording cost of goods sold. Okay? Now, what happens next? On the 19th, 5/19, what happens? Sold a $6,000 fishing boat for sold a $6,000 fishing boat. That boat cost us to purchase from our supplier $3,500. We sold it to Michael Ferguson. Michael Ferguson used Great American Bank card to pay for the boat. Captain Paul's deposited the credit card slip the same day and received an immediate credit in the company's checking account, net of a 2% fee. So in this case, we don't have a receivable, right? Why? Because everything's pretty much instantaneous, right? At the end of the day, when Captain Paul closed down the cash receipt or the cash register electronically, he sent all the information out to the bank saying, hey, you guys owe me money, send it, credit my account. That's exactly what happened here on the 19th. So for the 19th, what are we going to do? Super easy. Now we're going to debit cash. Our cash is going up by how much? $5,880, right? Remember, we have a credit card fee expense, which equals 2% times the amount that this person charged. They charged $6,000. There's my $120, okay? I need to credit my inventory, credit sales revenue for the $6,000. Notice at the end of this transaction, just this transaction right here, debits and credits always have to equal, right? So if we add our $5,880 to the fee expense of $120, that's $6,000. That matches the sales revenue, okay? So now I need to put in a explanation, right? What am I doing here? Well, we're just recording a credit card sale. And again, I'm going to put in, how did I calculate that fee? 6,000 times my 0.02 gives me my $120. Okay? Now, not done. Why? I had a sale. Okay? So I know, need 2 journal entries, got to book the cost. I'm not going to type it in. I'm going to be super lazy, right? I'm just bringing everything down right here. Okay, so what's the cost of the boat? Well, the problem told us it was $3,500. So I'm going to debit cost of goods sold for $3,500. I'm going to credit inventory for $3,500. What am I doing here? Recording COGS. Done. Okay. So let's look at number 20. Number 20 said, received payment from Calamute Lake Patrol for the boat purchased on May 16th. So let's scroll back up. So this transaction right here, right? This did not involve a credit card. It involved accounts receivable. It was a credit sale, right? We actually gave this patrol, Calamute Lake Patrol, we said, here's the boat, pay us later, right? Well, guess what? It's now time to pay the piper. So we need to show that Calamute gave us cash. We don't have that receivable anymore. They satisfied their liability to us, okay? So on 520, I'm going to debit cash, and I'm going to credit my accounts receivable, right? And it should be, I should have wrote it up there, Calamute, or Calumet, whatever. Okay, so how much do they owe us? Well, they owe us, based on this transaction, 10 grand. So I'm going to get it off the books for 10,000. So I'm going to credit accounts receivable for 10,000. Are they paying us $10,000? No, they're paying us $9,800. Why? Because we had terms, 210 net 30, right? So that means that if they pay us within 10 days, we're going to give them a 2% discount. So we have a sales discount, which is our contra revenue account, right? And we're going to debit that for $200. Debits and credits equal, we're good. Again, what am I doing here? Well, I'm just going to say, why did I do this? What am I doing? I'm recording a receivable, or let me phrase that. I'm recording collection on a receivable. Recording collection from Calamute, or Calumet, whatever. Okay. Now, on the 21st, what do we got going on? Well, we got money from United Merchants. Cool, right? Super easy for us to do. What did we do originally? Well, we had them on the books for $1,176. That's what they owe us. That's what they're paying us. So I'm going to debit cash for $1,176. I'm going to credit my AR United Merchant for the same amount. And what am I doing here? Well, I'm just recording the collection from United Merchant. Okay. Now, the next thing we got to do, bear with me, is problem 8-6B. Okay. So 8-6B, what are we doing here? Well, we need to figure out what our allowance, or we're going to use the allowance method, and we need to figure out how much should we recognize, right? So the first thing that's you obviously should do is read the problem. So on page 418, allowance method. The Walbrook Company, which has been in business for 3 years, makes all of its sales on account and doesn't offer any cash discounts. The firm's credit sale collection from customers and write-offs of uncollectible accounts for the 3-year period are summarized below. Okay? So A, what are we required to do? If Walbrook Company uses an allowance method to recognize credit losses and provided for such losses at the rate of 1% of credit sales, what amounts of the accounts receivable and the allowance for doubtful accounts should appear on the firm's balance sheet at the end of 2017? What's the total amount of bad debt expense? What total amount of bad debt expense should appear on the firm's income statement during the 3-year period? Okay, super, super easy, right? It really is. I know it looks kind of convoluted, but the first thing I'm going to do is I'm going to basically regurgitate everything that's in the problem. That chart that they give us, I'm going to regurgitate that, and I'm going to put it right here and calculate, so I can calculate everything. Okay, collections, and then we have write-offs. Okay, so we have 2015. Make this a little bigger for us. There we go. Okay, we have 2015, 16, and 17. Okay. So we need to book our sales, right? $1,502,000. For 2016, $1,752,000. And for 2017, we have $2,050,000. Okay? Underneath here, I'm going to put in what's my total, right? What's the total for this 3-year period? There's my auto sum. Okay, boop. All right, we're going to do same things for collections. How much did we collect? $1,466,000 in 2015. 2016, we collected $1,728,000. And for 2017, we collected $1,876,000. So what's our total collections over this 3-year period? $5,070,000. Okay, how much did we write off? Well, we wrote off 3 different amounts in the years, right? 2015, we wrote off $10,600. 2016, we wrote off $12,500. And for 2017, we wrote off $13,000. So we now want to figure out what is our total write-offs over this 3-year period. $36,100. Okay? So we need to figure out what is the accounts receivable at 2017, at the end of the year. Super easy for us to do. Okay? And think about how we calculate our accounts receivable, right? We take our total sales. Bear with me here. AR. Oh, nope. Excuse me. AR for 2017. Okay. So I'm going to take my total sales. I'm going to subtract out what I collected. I'm also going to subtract out what I wrote off. My AR for 2017, or at the end of 2017, should be $197,900. Okay. Now, notice what they tell us. They tell us that the 1% rate that we collect on our, where's it at here? There you go. A rate of 1% of credit sales. Okay, so our allowance for doubtful accounts is 1% of our credit sales. That means we have $53,000 $53,040 is our allowance for doubtful accounts, right? Look what we wrote off, $36,100. So for B, they're saying comment on this. Well, our allowance is $53,000. We only wrote off $36,000. Maybe that 1% is too much. What if we used 0.8%? I'm just picking a number here is really what I'm doing, okay? So if I take credit sales times this 0.08, $42,434 compared to my write-offs. That's a little closer, right? That's probably a better estimate to use. Now let's go down one. Let's say, what if I use 0.7%? Well, let's figure out what's 0.7% of my credit sales. That's $37,000, right? That's a little too close, right? That's pretty close, because what's the difference between these two is $1,028. So that means if I use 0.7 as an allowance and I write off more than $36,100, in fact, if I write more than $1,028 more than this amount, if I write off $37,128, look at what happens. There's not enough there to account for that bad debt expense or that write-off. So commenting on it, 1% is too high, 0.7% is probably too low, this 0.8% is probably good. Okay? So that, my friends, is how you do problem 8-4B and 8-6B. Okay? So if you have any questions after you watch this, please feel free to text me. We'll set up a collaborate session or whatever. And I'll be able to answer, I'll be happy to answer any questions you have. So thanks for tuning in, and we'll see you next week.